Alphabet, which is the parent company of Google, just reported their Q2 2025 earnings a few minutes ago as of me recording this video. So we're going to dive into what exactly happened in their Q2 report and whether or not I think this stock is a buy, sell, or hold right now. I'm excited to get into this video, but first, if you're new here, welcome. Go ahead and click that subscribe button if you haven't already. Help us get to that short-term goal of 10,000 subscribers by the end of the year, and consider checking out the Patreon with the first link in the description or the pinned comment down there. I just made a post of every single stock that's in my portfolio right now, whether or not I'm buying more, I'm holding, or I'm trimming that position, what my time horizon is, and what category that stock fits into, whether it's growth or value or dividend or turnaround play or a spec stock. And also on that post, I listed out 6 stocks I'm considering buying over the next few weeks or months. Go ahead and join the other 190 members of the Patreon to get access to that with the first link in the description or the pinned comment down there. All right, so let's jump into the video. Google had a very strong Q2. They beat on revenues by over $2 billion in comparison to analyst estimates, and their revenue growth rate is accelerating sequentially, meaning from Q1 of 2025 to Q2 of 2025, their revenue growth rate increased from 12% up to 14%. Their income from operations in the quarter was also up 14%. It could have been up a lot more if they wouldn't have had such a massive increase in general and administrative expense. That G&A was up 65% year over year, but a 14% income from operations increase year over year is still respectable. And even better than that, they had net income growth of 19%. And due to the share buybacks they've been doing, the EPS growth rate is even more than the net income growth rate at 22% EPS growth. When we break this down into segments, Google Services, which is made up of Google Search, that had a 12% year-over-year increase in revenue, YouTube Ads, which had a 13% year-over-year increase in revenue, Google Network, which was actually down 1% year-over-year in terms of their revenue, and then subscriptions, platforms, and devices was up 20% year-over-year. When you take all that together, they consider that their Google Services. The operating margin on Google Services was flat year-over-year at 40.1%. But when we look at Google Cloud, which is really the major growth engine for Google, year over year, the revenue growth rate accelerated from 29% in Q2 of 2024 up to 32% year over year in Q2 of 2025, which is now over $13 billion of revenue just from Google Cloud alone per quarter. And the Google Cloud segment is becoming much more efficient and way more profitable, with operating income skyrocketing from $1.17 billion in Q2 of 2024 all the way to $2.826 billion in Q2 of 2025, which now represents an operating margin north of 20%. In Q2 of 2025, they had a 20.7 operating margin, which was up from 11.3% in the year ago quarter. Let's see what the CEO, Sundar Pichai, had to say about the quarter. Check it out. He said, "We had a standout quarter with robust growth across the company. We are leading at the frontier of AI and shipping at an incredible pace. AI is positively impacting every part of our business, driving strong momentum. Search delivered double-digit revenue growth, as we saw earlier. Our new features like AI overviews and AI mode are performing well. We continue to see strong performance in YouTube as well as subscriptions offerings, and Cloud had strong growth in revenues, backlog, and profitability." We just looked at that. We saw the operating income was up way over 100% year over year, and the margins all the way up to 20.7%. All right, let's continue. Its annual revenue run rate is now more than $50 billion for the cloud segment. With this strong and growing demand for our cloud products and services, we are increasing our investment in capital expenditures in 2025 to approximately $85 billion, and we are excited by the opportunity ahead. If the stock drops in any meaningful way, number one, that's absolutely a buy the dip opportunity. But number two, it is because of this statement right here. He says, "We are increasing our investment in CapEx in 2025 up to $85 billion. Look at their quarterly CapEx growth over the past 5 quarters. Q1 of 2025, they had a 91% CapEx growth. Q2 of 2024, also a 91%. Q3 of 2024, 62% increase in CapEx. Q4 of 2024, 30% increase in CapEx. Q1 of 2025, they had a 43% increase in CapEx. And then in Q2 of 2025, the report we just got, they had a 70% increase in capital expenditures all the way up to $22.446 billion in the quarter. This does not worry me at all. Google is in the middle of a pivot. They are pivoting to AI. They are using AI in every part of their business, and they know that this is the next frontier, and this is where the next major growth lever is. Google is very well capitalized with over $95.1 billion in cash and cash equivalents and over $500 billion in total assets, with their total liabilities only being $139 billion in comparison to that over $500 billion in assets. This increase in CapEx does not add any extra risk to the business whatsoever at all, in my opinion. It does not worry me at all from a value perspective or from a growth perspective. From a long-term perspective, it does not worry me in terms of operating income growth. It does not worry me in terms of net income growth. This is overall a very positive thing for the business. All the big tech giants have insane CapEx numbers. Meta in particular. Meta increased their 2025 CapEx guidance from 60 to 65 billion all the way up to 64 to 72 billion. And I would not be surprised if in Q2 of 2025, they increase their CapEx guidance again, just like Google has. Same thing with Amazon. Just in Q1 of 2025, their CapEx was $24.3 billion, which was a 74% increase year over year. All the big tech giants are pivoting to some degree or another towards AI, and this costs a whole lot of money in order to make it happen quickly and effectively. So if Google drops on this CapEx increase news, despite a major revenue beat and a major EPS beat, it is absolutely a buy the dip opportunity with Google. This is already a stock that has struggled over the past year and year to date. Over the past 12 months, the stock's only up about 4%, and year to date, the stock is almost flat. This CapEx news should be a signal to the market that Google is not done innovating. They're going to pivot just like they have in the past, and this pivot to AI, just like the past pivots, are going to lead to insane growth in operating income, in net income, in revenues. This is going to be the thing that propels their revenues past $100 billion per quarter. We're able to get this stock who's still growing revenues in the double digits, still growing operating income in the double digits, and still growing net income more than 20% per quarter. We're getting this stock right now at a 21.36 trailing 12-month PE ratio on a GAAP basis and a 19.91 on a forward basis. The trailing PEG ratio is a 0.56 and the forward PEG ratio is a 1.38. The stock is a screaming buy right now. It's undervalued in comparison to its historical averages. It's undervalued in comparison to its peers, and most of this is on the fears that they lack the innovation to keep up with the other AI players. That fear is not based in reality. The reality is they're doing everything they possibly can to put the business in the best spot as it relates to the AI revolution every single quarter. They are willing to spend in order to make this happen. They're willing to shake up their legacy model of Google search by integrating the AI overviews and by integrating AI mode into Google search. This is not a dead company that has no growth ahead of them. In fact, their revenues are accelerating sequentially. With the kind of CapEx we just saw them announce, I wouldn't be surprised if that revenue growth rate acceleration trend continues into Q3 and Q4 of 2025. From a value perspective, this stock is a screaming buy. From a growth perspective, this stock is a screaming buy. From an innovation perspective, this stock is a screaming buy. I bought more Google shares earlier this week before earnings. I'll be buying today in the after hours, and I'll be buying tomorrow as well. I'm picking up as many shares as I possibly can of Google over the next few quarters because I don't think we're going to stay at this pricing for very long. Let me know in the comments below if you hold shares of Google, and what do you think about this Q2 earnings report? How do you feel about that increased CapEx, and how do you feel about the revenue growth rates, net income growth rates, operating income growth rates, and the Google Cloud growth that we just saw? If you made it this far in the video, consider subscribing and checking out the Patreon with the first link in the description or the pinned comment down there. I appreciate you being here in a major way. Thank you so much. Have a great night.